Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios per time frame on Bitcoin, starting with the medium time frame bullish scenario where we are looking for a finished three-wave corrective structure in a regular flat. The low of C is in and we are looking for new highs to come. In this particular scenario, the problem however is this wave B, because wave B by itself is a flat, and a flat in a bigger flat pattern is extremely rare, never preferred, and therefore this scenario has lower probabilities. If we, however, make this the low and we are looking for new highs, we can zoom in to the potential bullish scenarios of this structure to the upside, where the first one is a diagonal. Now, we've been talking about all these scenarios already for a while, right? This diagonal does not look good. Wave 3 is longer than wave 1, which is not allowed in a contracting diagonal. So then we have to start thinking about expanding diagonals, but expanding diagonals are very, very rare, therefore never preferred. Another thing is that we expected locally price to at least go to the downside once more to take the double bottom. And if you have a look over here at the double bottom and the low of the channel, then there's a problem, because the low of the channel for a contracting diagonal is not allowed to be hit. But if you want to take the liquidity below the double bottom and then potentially move up, you will hit the channel, invalidating a contracting diagonal. And again, an expanding diagonal is very, very rare, so this scenario is not preferred. In this bullish scenario, a double 1-2, the problem is that the second wave 1 is longer in price than the first wave 1, which is not what you want to see. Another problem is that this lower degree wave 2 over here in blue is longer in time than the first wave 2, which is also not what you want to see, because the green count is the higher the green count, 1, 2, 3, 4, 5 in green, and then inside the green 3 you have the blue count, 1, 2, 3, 4, 5. So the blue count should usually be shorter in time and price compared to the higher degree Elliott wave count, but as you can see, that is not the case. Wave 1 is longer in price and wave 2 is longer in time, as it now passed the vertical line, the 1-to-1 over here, unless the wave 2 is already in here, and this is just a 1-2 scenario. But we will go into the micro time frame here and show you the probabilities that are increasing for a continuation down. Another thing with the bullish scenarios is there were no bullish CVD divergences at the low. With this low and the higher low created, there were no bullish CVD divergences, and that is really something that I would like to see. Now, if we then go to the bearish medium time frame scenario, we are looking for a three-wave structure in a wave A, B, and eventually a wave C to the downside in a 5-3-5 wave structure. Now, common targets for wave B are the 382 to the 886, so the 0.5 being tagged over here is perfectly fine. And you're then looking for a wave C to the downside, where in this case, you are going to take the double bottom at 24.7K. Now, Bybit already took this low over here with a wick to 23.6K. This low has been taken on Bybit, but also it's very common that if one chart takes a low, that all the other charts will eventually follow. As you can see, my Coinbase chart here did not yet take the low, so the probabilities from this side, like point of view, are higher to take this low. And also, if you have a very big wick like on Bybit to 23.6K, usually you fill that wick after a corrective structure, you move down to at least go down to 23.6K. Now, in this particular scenario, if we zoom into this structure, we want to see a three-wave move towards the upside. Now, the fact that the two bullish scenarios I explained over here have a low probability based on Elliott waves, also a normal impulsive structure here doesn't work because of the overlap between 1 and 4, so that's also invalidated. It automatically increases the probabilities of a three-wave structure to the upside, also in more detail explained in the live stream yesterday, in case you want to check that out. So over here, what we're then looking for is a three-wave structure in a WXY or an ABC. Most common target for both a C or Y is between the 1 and the 1.236, as you can see over here, with a more rare target being the 1.618, just above price over here. We do have an additional resistance box between 29.1K and 29.4K, but based on what we see more locally, probabilities aren't that high at the moment to find another move to the upside, and potentially the most common target area is the boss of price again and moving towards the mixed price moving towards the downside. Now, in this particular scenario, if we then zoom in to what is happening more locally over here, because in this scenario, right, we are looking for eventually more downside, either an ABC is already finished, or in a, by the way, WXY, we have a flat X, and then we're looking for a zigzag to the upside for Y. So that is how you can then reach the 29K area, but you would still expect a move to the downside eventually based on the higher time frame count. If we zoom in to what we see over here, the question is this the high and do we go down, or can we expect another high to the upside to 29.2K? So let's then zoom in, go to the 1 hour over here, where if we look at this range, the only way to find a move to the upside here is either to see an ABC or a WXY. Now, in this particular scenario, I have a WXY on my chart. So a W is a 3-wave structure, then you have a 3-wave X, and you're looking for a 3-wave Y. W over here is a zigzag then in an ABC. X, any corrective structure. But if W is a zigzag, Y has only 2 options in a sideways double combo, either a triangle or a flat. Now clearly it's not looking like a triangle, and a flat would have been nice if price bounced here to the upside and then a 3-wave down. Then you want to see a 3-wave up and then a 5-wave move down. But we never got the 3-wave to the upside. Instead, price continued to the downside. So a flat has very low probability as well. So currently a WXY is not looking good. The alternative is then for the bulls that this is an A, B, and you're looking down for a wave C. But the problem here is that this wave C is already taking more time now compared to this wave A. If I take a fib time over here from the high of A to the low of A, and we put it on the high of B, then you can see the 1-to-1 over here. So the time between the high of B and the 1-to-1 line is the same as from the high of A to the low of A. And at the moment, if this is a wave C, it's going to take a lot more time than this wave A, which is not really that common. So that's something we have to keep in mind for the probabilities of a wave C. Now for a wave C, you do expect a double bottom here to be taken, which is something we were looking for anyway. The probabilities for downside, as mentioned also in the video earlier today and basically the last week, probabilities were higher for a move towards the downside, looking for that double bottom over here. But then the reaction is important. Do we find support for upside, or are we potentially in a more bearish scenario, where in a more bearish scenario this could be a WXY corrective structure of then a bigger wave 1, 2, and we're now in a wave 3 towards the downside, and that would mean the high is in and you're gonna go for new lows, where this is then your wave 1, then you have a WXY corrective structure in 2 for then a continuation to the downside, where you want to see impulsivity increase and you want to see volume increase as well. Now if we then look at the corrective structure of this wave 2, we are looking at a WXY as mentioned in green here, WXY. So this has not changed. Basically the count that we had over here locally hasn't changed, in this case then for a wave 2. W zigzag, X is a flat, and then we have an X in wave Y, ending nicely over here in this white box, common target for wave C, and then an ABC flat. Very nice for then continuation towards the downside in this particular scenario. And then more locally, if this is a nice double 1, 2, wave 2 retraced to the golden pocket, taken from the high to the low of 1, common target for a wave 2 as well. In this case, by the way, we did see bearish CVD divergences over here, right? I will show you that in a second. But also, if we zoom in to the local price action of the weekend, after we got this move to the downside and we started taking these lows, this scenario got more probable, where instead of a zigzag A, B, C, and then looking for a move up for a potential flat, we started to move to the downside, more bearish CVD divergences, and then a potential 1, 2, 1, 2 continuation down. Within this second wave 2, we have a flat A, B, C in a W, then we have a wave X, and then a zigzag in a wave Y. Ending wave 2, more bearish CVD here as well locally, price moving to the downside, resulting over here in a contracting diagonal double 1, 2, which is what you want to see in a double 1, 2 pattern for then an explosive wave 3 to the downside, which if we have a look at the volume over here, well, a high amount of volume in this move to the downside, that is also what you want to see for a wave 3. So the probabilities, because of everything happening here, now increase for continuation to the downside, and the probabilities of price holding over here, well, only in an ABC, but as just explained, if this is wave C, it's already takes very long in time compared to A, which increases the probabilities of a wave 1, 2 continuation to the downside. It's nice that we were looking for downside anyway, but this is how additional information can give you eventually a change in targets. Instead of the target being potentially over here, where we do have some support between 26.8k and 27k, and currently here 27.4 to 27.5, but based on new information, instead of potentially having the end over here of a move and looking for upside, we might actually look for continuation to the downside for much lower targets. Now, if we then look at the CVD divergences, then over here we had the bullish and bearish CVD divergences, but the bearish CVD divergences were the CVD divergences on the right side of the new high, as explained in the previous video. So there is some priority going on. Now, if we go to the CVD divergences over here and I zoom out on the 15-minute, refresh quickly. Now what you can see over here, lower highs on price, but look at the yellow line, higher high on the CVD with the high here, but also more locally, lower high on price, higher high on the CVD. So more bearish CVD divergences. And even if you zoom in here, lower highs on price, much higher highs on CVD. So there was a lot of absorption going on of market longs absorbed into limit shorts to push the price towards the downside. We are now at a little bit of support over here, so let's see how that goes. But of course I explained the probabilities which is what you see over here, where on the medium time frame probabilities are higher for a price to move towards the downside, because the flat scenario is just not that probable, because we then have a wave B flat inside a bigger flat. That's not what you want to see. If we go to the low time frame, instead of HTF, it should be LTF. On the lower time frame, both of the scenarios shared over here, a diagonal or a double 1-2, have low probabilities, because over here, this move up is longer than the first move up, and it takes too long, right? On the micro, we are looking for the double bottom over here, price move down instead of creating a wave Y type of structure as in a flat, which increases probabilities for continuation. Wave C has a bit lower probabilities than a 1, 2, 3 for lower prices. But first, let's talk about the double bottom and potentially support here, and then we take it from there, right? So these are currently the probabilities from an Elliott Wave scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.